Are we on the verge of a bear market? Hi, it's Charlie giving you today's video. So we're going to have a look at the US stock market here and do some analysis within all of this. Very often, by the time I will put out a video on a subject like this, the reason that I'll put a video out is that the market has already started to fall. In my community, we already shorted up here the S&P. Why? I'll go through all of that with you in a minute. But certainly by the time we usually put a video out, it's because there's been a bit of a move and it's something which collectively people are starting to question. However, technically, as it stands, as of Friday's close, the S&P, it had a dip below its daily 200 moving average here, the all-important moving average that so many traders will look at as a definitive between a larger correction and not. But the S&P has held on to that as of Friday's close. Nice reversal, technical support here as well, whereby we made this high, we pulled back to test it, a couple of instances here and certainly here, and a nice bounce. And I was even talking in my community yesterday, in my trading room yesterday, that we should be expecting a bounce to come in relatively soon. And I think that the news from yesterday, the jobs numbers they're weakening, but they weren't drastic. It wasn't a drastic non-farm payrolls report either. So it is certainly weakening. We're seeing unemployment rising slightly there. And I think that Powell's calming words there yesterday afternoon will have no doubt helped the markets, and his but he certainly did not express concern about the US economy, etc., etc. And I think the market has run with that. So in the very short term, the capacity, the potential for a bounce is certainly here within the stock markets. And if you're a bull, this is a good place to be looking to buy. Okay, so if you're bullish the US, bullish the economy, and bullish the stock market, then great, you should be buying down here. And there could well be some follow-through bounce. In fact, I'll go through some examples in just a minute as far as follow-through bounces are concerned. Now for the but. So let's have a look at, is this the beginning of a larger correction, which is really what this is about. So far, the S&P from top to bottom, let's have a look. So if I just can zoom in a little bit first of all. So if we take from top to bottom here, what has it done, at least on an intraday basis, about, as you can see, just under 7% as a fall so far from top to bottom. So, okay, now if we just think for a second about bull markets. So if you are a bull, then even within bull markets, in a normal year, and I have to stress, in a normal year, then the average correction within a normal year, historically, even if we don't go into a bear market or anything like that, there are, minus 14% historically, going back 75, 80 years, then on average, even within a normal bull market. So if this is, just a correction and we're going to go higher, of course you get smaller corrections than that. But what was interesting is last year, in 2024, the biggest correction we had last year was, what was this here? Let's go and have a look at it. So let's put the numbers on. I think it was about 10%. I'll just remind myself here, if we just take that high, this was the correction that we had in the summer. Yeah, just under 10%. Okay. So in relative terms, still quite small by historical standards. That the whole of 2024, all we had was a 9.5% correction in the S&P. So far, all we've had is a less than 9% correction, less than 8% correction, as we just looked at there. So, given everything that is going on right now, uncertainty with regards to tariffs. What type of tariffs are coming in? What ones are going to be backtracked? What businesses are having to do in order to combat this potential with various tariffs, whether it's with the neighbors of Mexico, Canada, pending tariffs on Europe, obviously tariffs on China. And it doesn't matter whether your belief is that you think that in the longer term that will be good for the US. However, in the near term, it creates uncertainty, and markets don't like uncertainty, of course. So, with that being said, what you're already starting to see is that businesses are starting to be a bit more cautious, and when businesses are being a bit more cautious, then that leads through into the economy, and then we start to see a cooling of the economy as businesses start to make adjustments to their operations. So certainly from a fundamental perspective, with everything that's going on in the world and what the US are doing, trying to implement with regards to tariffs, then there's a backdrop of uncertainty, and from a macroeconomic perspective, we've already seen weaker jobs coming through from the US. We've certainly seen weaker jobs reports, but we've already seen some weaker economic releases as well. We've seen manufacturing sector PMIs fall below 50, for example. Having said that, the services sector PMIs came out strong actually just a week ago. However, whenever you get a down period, even if this was to emerge into a larger bear market, or certainly a larger correction, even if it wasn't a bear market, you would expect to see some economic reports are still going to come out okay along the way anyway. So it's not like every single report ever is going to be bad. But what I'm trying to say before we come into the technicals is the backdrop is there. There's a number of things falling into place in order for the US markets to have a bit more of a correction. So, what about the technicals and everything else? Well, one last thing as far as the macro is concerned. We know what the US are trying to do. They're trying to certainly balance the books a bit. They're looking at all of the waste that's been there, which has been built up over decades as far as spending waste is concerned. And they're trying to domestically tighten things up. So therefore, we've seen them reducing the federal workforce. They're trying to look at ways to save money. So whilst there's an adjustment going on there as well, plus what they're doing with immigration, that does impact on the economy as well. All of the ingredients are there, certainly in the short term, and we've even heard cabinet members, Secretary of State saying, there may be some short-term pain. The Secretary of Commerce saying the same thing, Lutnick saying the same thing. So we may have to go through some short-term pain here. So even if you're a mega bull towards the US stock market, we're even hearing members of the cabinet there saying, look, there may be a bit of short-term pain as they're going through and trying to make these domestic adjustments. So everything is there in the background is what I'm trying to say, in order to create, potentially a larger correction. Now, like I've said, if you're a mega bull, then you'd want to be buying now. This is not a bad time. We've done a best part of 8 to 9% correction. I've already forgotten what the numbers were. Let's just put them back on again. Or was it 7.5 while I was doing this? Depends on. We'll call it 8%. An 8% correction. Yeah, okay. But all I'm saying is historically, corrections. You would normally expect, even within a bull market, to have larger corrections than just 8%. So the potential for a larger correction is there. like I've already said, and on average 14%, even if we don't go into a bear market. And the macroeconomic uncertainty and all of that that's going on actually sits quite well for a correction. And on the back of that, the pure euphoric sentiment that we had just in the months in recent months as the stock market was at its highs. Here's a great example here. The envy of the world, America's economy, a special report. Fantastic front headline there from The Economist magazine just a couple of months back. And we've seen a lot of euphoria coming into the beginning of the year with regards to expectations of the stock market and the economy. And more often than not, when everyone expects one thing, the market does the other. And that was part of the reason why I was shorting. Obviously, it was a technical reason as well, but we shorted the S&P up here. Just couldn't go with. I was moaning within my trading room with my traders. I just couldn't go with if the stock market was going to go higher, fine. But the sentiment it was basically at extremes, and it had been since late November, and I just couldn't buy into that. Okay, in the short term, the sentiment right now has got quite pessimistic. Very quickly, it's flipped by certain measures. However, that's short-term sentiment, and I still wonder how much pain has been inflicted when you zoom out. If I take us out to the weekly chart. Okay, so anyone who's been buying the stock market over this past, even over since the beginning of 2024, well, yeah, okay, market's pulled back a bit. No one's in any pain unless you were buying literally at the top in the last month or two. So the scope for a little bit more uncertainty and a bit more of a clear out is there. A shakeout of the weak hands is certainly there. Now, I've flipped us over to the weekly chart. And in fact, I'm just actually, before I do that, coming back to the daily, because I can see the potential for certainly a short-term bounce here coming in. Let's actually come back to just the bear market of 2022, which was about 26% correction or whatever. So let's just quickly go back to 2022. And even within that bear market, which ultimately ended up falling, like I said, 26, 27%, whatever it was, we saw some lovely bounces along the way, which is typical of any market. So, you get you get to a point where you think, oh, that's it, we're off now. Oh, no. And even this run here into the March of 22, certainly, oh, blimey, surely that's it, we're off to the races, going to go up to new highs now. And no, the market actually ended up not bottoming until the October. So coming back to where we are right now, yes, I see the potential for a bounce, but I'm looking at that as ultimately I'm looking at it at the moment as being a dead cat bounce. So is it tradable? Yep. Could I be wrong? And the stock market over the next month is going to make new highs. Of course, anything can happen in the markets, but I'm just saying the backdrop is there with global uncertainty and uncertainty amongst businesses in the US because of the tariff situation, that could tie in, and obviously the fact that the US are cutting spending domestically as well, that's going to have an impact. And so I'm looking at this as potentially a dead cat bounce, and actually there's some more downside to come. So let's go and have a look at this now, and I'm really spending a long time here today, hopefully you don't mind. So if we come out to the weekly chart, what was some of the reasons for me to short? Was just from a purely technical perspective. I've laid the groundwork from a macro perspective and from a little bit from a sentiment perspective, how frothy it was at the top. You see my long-term trend lines that I have in play here. The S&P had come up to those trend lines. If I go to the likes of the NASDAQ as well, very similar. If we look at the NASDAQ, big long-term trend lines that the NASDAQ was coming into as well. And actually I've got a different NASDAQ chart here as well. A major large channel there as it got up to the the steeper trend channel, but also a much bigger, wider trend channel as well. So there was a lot going on technically with regards to let's get back to the SPX. There we go. The S&P. So this is the S&P cash here. Now, what was interesting from a technical perspective is that we had this divergence here. So as price was making new highs, the MACD indicator, you could use an RSI indicator as well, was making successive as price was making these new highs. The indicator itself was making successive lower highs, and you can also see that in the histogram of that same MACD indicator as well. So that was in the background there, that we had these divergences going on. As we went into the highs, breadth was breaking down as well. So the number of stocks that were participating and making new highs was dramatically falling, even as the index itself was making new highs. So what that means is it was very few stocks, the likes of Nvidia, the huge stocks which have a bigger weighting, which were carrying the stock indices to new highs, but below the surface there were a lot of cracks. So within the 500 companies that make up the S&P, fewer of those stocks were making new highs themselves. So it was only a relative few that were making new highs there, and that's what we call a breadth breakdown. So, okay, we're coming off at the moment, or have come off so far. So we've had a 3 negative weeks here for the S&P. Like I've said, I think certainly the ingredients are there for a bounce. We've come to the all-important daily 200 and some technical support as well, that the ingredients are there for a bounce. However, do I think that the stock market after it, or if it does bounce, do I think that's it and we're done? I just think that there's a lot that's been going on when we look at what their policy is domestically within the US at the moment, and we've even got the Treasury Secretary and the Commerce Secretary admitting, there might be some short-term pain, that the scope for a larger correction is there, at least over 10%. So, and I've talked about some of the other levels. What would turn this into a bear market? Well, a continuation of the tariffs, if that got into a trade war with the likes of China already responding towards the tariffs from the US, and this has got nothing to do with this is not nothing to do with politics and whatever your political persuasion is. It doesn't matter. These are the things that are taking place. So whether you think it's right, not right, well, it doesn't matter. We're just talking about the economies of everything, and so the uncertainty that could come. Now, these things might die down, and if they die down, we'll end up with just a normal correction, and then the stock markets will calm down, and the markets will then, if the tariffs get negotiated down, then it's very. It could certainly happen that the stock markets then just start to push back up and ultimately end up going to new highs. But the threat, I guess, is if you're looking for a bear market, what needs to be happening in the economy at that time? Well, in order to create a bear market, for this to be more than just a correction, a 10 to 14% on average correction. So let's say this is just a 10 to 20% correction, and that's it. So stock markets, that's perfectly normal for 10 to 20% corrections within a bull market. So yeah, things die down, we have a bit of a correction, and then within a few months, so we come down a little bit more, and then within a few months, we bottom, and then the stock markets start pushing back up, whatever, later in the year, or whatever, or in a few months even. So that's the bullish scenario there. That's all this is. For those of you who are looking for a larger correction, Well, it would be an escalation of those tariffs, or that they stay implemented, and that affects both the US economy and others, certainly in the short term, and therefore we do end up in some form of bear market. So are we on the verge of it? That's the backdrop. It depends, of always. So all you can do, I've got, like I've said, I've been short for a while now, a few weeks, I guess, shorting up there a few weeks ago. And we take it one step at a time as regards to how things develop. But from a technical perspective, from a sentiment perspective, the ingredients were there for the stock market to have some form of correction. Personal choice whether you think that there's going to be something larger afoot, and we'll only find out as time goes by. So my view is that, well, no one knows what's going to happen next. But what I can do is look at the ingredients and say, is a 8% correction or pullback, do I think, with everything that's gone on, do I think that an 8% correction, that's it and we're done? The answer to that is no. Have a lovely weekend. For those of you who are still listening, 21 minutes in, and I'll be back in touch next week.